Here with business, President Hollande doing his best to seduce all-important foreign investors, isn't he?
Yes, this following on from last week's efforts in San Francisco to woo the tech community. François Hollande will be turning his attention to major multinationals at a meeting getting underway at the Élysée Palace around about now. Some 30 executives are due to attend what's being called an attractiveness council by the French government. They'll be hoping to encourage them to invest more money in France and, of course, to create those all-important jobs. Now, François Hollande won't just be selling the strong points of the French economy. He's also expected to unveil some new measures to help foreign investors, including a simplified visa process. Delano de Souza has more details.
François Hollande is continuing the charm offensive. The heads of 30 companies that include Siemens, Volvo, GE and Nestlé are at the Élysée Palace for what's being called a Council of Attractiveness. The companies invited have combined annual revenues of 850 billion euros, and the president is hoping he can convince them to invest more in France.
There are 20,000 foreign companies in France. They employ over 2 million workers, and this accounts for 30% of our annual exports.
On Sunday evening, the company heads met with the French Prime Minister. The government is trying hard to improve its image, an image marred by one of Europe's highest labour costs and a reputation for government interference in business deals, like preventing Yahoo's takeover of Daily Motion. Currently, 75% of the foreign companies present in France are from Europe, followed by 20% from the United States. The remaining come from Canada, Japan and emerging markets. The objective of the Council is to increase levels of foreign investment by 40% in the next 3 years and see 300 new companies set up in France each year. In an effort to make this happen, the president is likely to offer fast-track visas and simplified customs procedures.
To Japan next, where there's been some disappointing figures of growth in the world's third largest economy. Japan's GDP expanded by just 0.3% in the last 3 months of 2013, much less than had been expected. Overall, in 2013, the Japanese economy grew by 1.6%, only a slight increase over the previous year. That's despite the massive stimulus efforts being undertaken by the Japanese government.
Not so good for Japan then. Has it affected the markets?
No, the Nikkei shrugged off that bad news for Japan in trading in Tokyo today. You can see it closed up 0.56%. Most of the Asian markets cheered by news coming from China that bank lending hit a record high in January. This after the fears of a credit crunch back in December. You can see both the Hang Seng and the Shanghai Composite up significantly there. Here in Europe, it's been a largely positive start to the week. Mining companies doing particularly well in London, pushing the FTSE 100 into positive territory. A flat start on the DAX in Germany. Here in Paris, shares in the carmaker PSA, Peugeot Citroën, are up 1.4%, this ahead of its results. Due out later this week, investors also looking ahead to the Purchasing Managers Index surveys for the Eurozone and China. That's details on business sentiment due out this week too.
OK, we shall bring you those, of course, when we get them. Now, let's have a look at some of the day's companies news then. Yeah, we'll start with the French company Bouygues, which has taken a €1.4 billion write-down on its stake in the engineering firm Alstom. Bouygues owns about 29% of the company, which slashed its profit forecast earlier this month, warning of continuing poor orders for its thermal power generation business. Shares in Bouygues, which is a big construction and mobile phone business, are down around 1% in Paris today. The crowdfunding website Kickstarter says hackers have gained access to some of its users' personal details. The company's chief executive says usernames, email addresses and phone numbers were leaked, but not credit card details. It's recommending users to change their passwords and says it's working to find the source of the breach. And Google has purchased the tech startup Slick Login less than a year after it was founded. The Israeli firm developed a way of verifying a user's identity through a sound played on computer speakers that be picked up by their mobile phone. No details yet on how much Google paid for the firm, but it's the latest in a series of acquisitions by the internet giant. It does sound different, doesn't it? Now, finally, we got news for you, a very, very small sum, paid for a title with a very, very long history, haven't we?
It's the Reader's Digest, the magazine favoured, I think, by all our grandparents at some one stage or another.
Definitely.
It's been sold for just £1 sterling to the venture capitalist Mike Luckwell, according to the Daily Telegraph newspaper. His past investments include the company behind Bob the Builder, the children's TV series. It's a big loss, though, for the previous owners, Better Capital. They'd invested some £14 million, around €17 million in the company back in 2010. It's not recouping much of that loss with just a £1 purchase price. Reader's Digest saw its CD and book sales fall In recent years, they've had to cut the vast majority of jobs at the company, 95 of the 125 people working at the title. The new owner says he's hoping to expand the business into financial services to capitalise on the over-50s market.
So as we said earlier on, can they fix it?
Yes, they can.
That's a Bob the Builder reference if you've no idea what we're talking about.